All right, welcome to the Calzone. Today I want to talk about the differences between the different types of property. We have condo, we have townhouse, which could be a whole episode on itself.
Oh, 100%.
Just getting the differences there. We've got manufactured, which is mobile. We've got two different types of manufactured, really. We've got
a fixed versus non.
Right,
yeah.
We've got, and it all comes down
Personal
to foundation.
real,
We'll
yeah.
get through that. But we've got mobile home that's real property and mobile home that's personal property.
Yep.
And then we've got single family stick built.
Yeah.
So, Brian, I know I've asked you this thousands of times. The difference between a condo and a townhouse.
Yep.
Take it.
All right, guys. So a lot of people do come to us and they're like, "Hey, I'm gonna look for a condo," and the answer ends up being, maybe we should look for a townhome instead.
Right.
Just depending on what type of loan they're trying to get. So when you buy a condo, you are not buying the land that your condo is sitting on. You are buying a 1 in 72, 1 in 72nd share of the entire property, right? So it makes some difference on homeowners insurance, but really, we're not just qualifying you, the borrower, to purchase the condo. We then have to qualify the condo to allow you to purchase it. So, because if you have a shared ownership, which is basically what you've got, when you have shared ownership, if something happens, like there is a legal issue with the condo complex, that can affect our ability to do a loan in there, because we don't want to set a borrower up to where it's, okay, the condo has reserves and everything right now, but if they lose this legal battle, this slip and fall, this whatever it is, and they've got to pay out a large sum of money, they're going to be in the red. And if they don't have the reserves, they're going to jack everything up on you. And then, like resaleability is a little bit tougher. Your HOA's probably going up if that happens. So that's one of the things that we have to look at. The other thing that we have to look at is ownership interest in the condominium complex itself, right? So if there's 100 units in the complex, if you're buying a primary residence, it does not matter, right? In this circumstance, this doesn't apply. If you want to buy an investment home, right? And I've had that. I think I had 4 phone calls in the last 2 weeks where it was people saying, "Hey, I'm going to buy an investment condo, and then 3 years from now, I'm going to move into it and retire." It's like, that's a great idea. Unfortunately, when you have that, let's say if it's 100 units in this condo complex and 52 of the 100 are rented out, it's over that 50% threshold, or over 49 of them are rented out, you're in a position where you can't get a loan on that property. Not through Fannie Mae and Freddie Mac.
Right.
Yeah.
Because what they're trying to do is they're trying to maintain a standard of living throughout the complex.
Right.
And there's pride in ownership, right? Not as much pride in renting. So they're saying, okay, well, and it makes sense, right? Like the overall quality of living could come down because people aren't taking care of their stuff if they're renting. Yeah. So if you have a majority of renters in there, buying an investment property isn't going to make sense.
It sounds like the simplified of what I'm hearing you say is the banks have this certain risk tolerance.
Yep.
Right, and that's what it comes down to is if more than 50% are renting, then it adds to that risk tolerance. If there's not reserves, which are all things I would say are something that you guys should be looking at, right? If it's a risk for the bank, it's going to be a risk for the individual, in my opinion.
Yeah. And you know what? That's really the great part about it is with lenders and with borrowers, the risk profile coincides so much that it's not really just the lender covering their ass. They're covering your ass too. That's the reason it's in place. One thing I will touch on really quickly is like that's not the end of the road, because it's Fannie Mae and Freddie Mac. It's the big guys that have those rules. There is such a thing as a non-warrantable condo loan. Private money, brokered, right? Where you're looking at a higher interest rate. And it's like, well, if we can, and that's always what we're going to tell people, if we can get you a better interest rate on a townhome than a condo, that's another thing too. Fannie Mae and Freddie Mac.
Private money probably double whatever the going interest rate.
You think it's double?
Yeah, I would say
now it is, because when it was 3-4%, you couldn't find one for less than 8 to 10.
Yeah.
for private.
Yeah.
I don't know if you've had a different experience, but I was talking to some of these
I
private
haven't
money
dug
guys.
into it in a while, and we're kind of getting off topic here, but I've always thought like 11 or 12%. I guess not always thought 11 or 12%. That's what I've been thinking over the last couple of months, but I haven't had to answer that question in I don't know how long. So
I would say it's probably pretty close, right? Like, I mean, maybe more if rates are low. If rates are in the 3s, I don't think they're going to give you a non-warrantable at 6. But
right.
depends on the lender. So one other thing that I will say is one other main difference between a condo and a townhome is going to be your interest rate. Condos have a 75 basis point hit on the pricing sheet, whereas townhomes
That's
do
huge.
not. I know.
Wow.
That is huge.
So, and really what that translates to is probably 1/4 to 3/8% on your base interest rate.
Wow.
Yeah.
Put that in layman's terms for me.
So if you want to buy this condo for $300 and get a loan for $300,000, right? Let's say $400,000 because that makes the math way easier.
Perfect.
Fantastic.
Easy math.
And you want a 6.5 interest rate. And I say, well, on a condo, you're going to have to pay $3,000 to get that 6.5 interest rate. Same scenario, but townhome, you get that interest rate for no cost. So that's, where you're looking at that is you're either going to pay more out of pocket or you're going to accept a higher interest rate, like maybe a 6.75 or a 6.875 to get into that condo. So then we get into townhomes. And townhomes, you actually do own the land that your townhome is built on, right? So you have an APN. Your homeowner's insurance, it's a different type of policy. And
APN is parcel number.
Yeah, your parcel number, sorry. You have your own parcel number. You own the land that your house is sitting on. You still do have an HOA in 99% of these places, but it's generally a little bit lower because you're not paying for like condo complex HOA, like the insurance that the entire complex has to carry for everything. And
can I go into just the real estate piece of that, and Cal jump in here if I'm missing anything or need to add anything. So a townhome can also have an adjoining wall. It doesn't always have
one
to have
wall.
Yeah, it doesn't always have to have a common wall. It can be a standalone, but generally they will have what's called a zero lot line. So you have very, very close fences on the sides, and per the city, depending on the zoning, right? Usually we have setbacks of 10 to 15 feet. I can't remember exactly what they are, but you can have 5 or less feet for zero lot line.
Right.
Just to kind of clarify what if you're looking through town and you see, God, that fence is close, or these two houses look like they're joining, it's probably a townhome.
yeah, and that's really one of the things that creates a lot of confusion, because a lot of those places at the same time can end up being condominiums. Where it's like, well, yeah, they're adjoined, they're either condos or townhomes, and right, like if you go and look at the county or online, it's going to say condo / townhome.
Right.
They don't break it out.
So frustrating.
It's not just like.
Does it have an APN with a dash and like a number? Is that how that? I don't want to get too far off topic here.
I just called Brian, bro.
Yeah. Perfect.
You just got to look at the Exhibit A.
I'm pretty sure this is a townhouse, Brian. What do you think? He's like, no, Cal, definitely condo. Shit, again.
Yeah.
One thing we didn't talk about really, really quick, right? Townhome, right, where you don't own, condo where you don't own the land. What that means, right, is you own that airspace, which we didn't really talk about. Own that airspace. So the HOA covers everything outside of your paint, basically.
Right.
Yeah.
Right. So exterior paint, roofing, landscaping, drainage,
Right.
Yeah.
just about everything.
Yeah, on your insurance policy,
yeah.
it's usually much cheaper because you're just getting a walls-in policy.
Right.
You're basically protecting your personal stuff. It's so that's why generally the HOA with a condo is going to be higher, because they're paying for your roof,
Right.
for your exterior to all be protected.
Right.
So,
Townhouses don't do. I didn't want to get into the HOA stuff because I think HOAs are going to be different
across the board, they're all so different.
Yeah. I've seen townhouses that have the same kind of policy.
Yeah.
Yeah.
And
Yeah.
I don't think they always do though.
No, I think it's different.
It's
That's what
different
I'm saying.
all the time.
So
In
condo
general.
townhouse, differences, land, no land, right?
Yep.
Land with a townhouse, no land with a condo. Percent ownership, as far as getting a loan on that, percent ownership matters.
Yeah.
And that's percent ownership in the building. Percent owner occupied in the building.
Yeah, exactly.
Right.
So right,
For
it's
condos.
that.
Right.
Yeah.
We're going back to condos real quick.
If it's primary, if it's a primary residence, it's not going to matter.
Right.
Right. As long as it's a primary, they're like, yeah, we'll take as many primary buyers as we can.
But if you got cash, buy that sucker.
Totally,
Yeah,
totally valid because we got a lot of investors now in our market that are like, "Hey, I got $350,000." Well, you're probably going to be looking at a condo or a townhome.
Right.
Yeah.
With that.
Yeah.
Just being honest where we're at right now.
Right.
Right. And so this is good for investors and home buyers, right?
Right.
Yeah.
Now, manufactured. Let's dive into manufactured. This can get a little squirrely.
You thought condos and townhomes were fun.
Manufactured, real property and personal property. Real property, being real estate,
Yep.
is actually you own the land and everything. Personal property, there's why I wanted to talk about this today, or why I'm excited to talk about this today, is because there's a couple of places in town, a couple of these mobile home parks that are starting to market or advertise a little bit more. Did Odin fart in here, dude?
Oh yeah, that definitely happened.
I'm glad he's facing your way.
Wow, bro, that is right at me.
We'll edit this out and post.
No.
Manufactured.
If I got to deal with it, bro, you guys got to deal with it. Pull it together, everybody.
You brought it up.
The real property, you own the land around it.
Yep.
So similar to the condo townhouse breakout.
Similar theory, yeah.
But personal property, there's a company in town that is starting to market a little bit more. They are a trailer park. You can buy these beautiful mobile homes for like they're like $199,000. So I've had a couple of clients be like, "What is this? Let's do it." Yeah. And I have to tell them, like, you might as well just buy an RV or buy a school bus, fix it up like I'm seeing on TikTok, and go live off the land somewhere, because what's going on is you're buying that mobile home.
Yep.
They do not put a foundation on it, and you are, or they don't put it on a foundation, and you are
making a really big truck payment.
Exactly, dude. You're making a huge payment.
You're leasing the land.
And you're leasing the land for $750,000. So you got space rent,
That. So it's not just financing that $199,000 that you're going to get on a personal loan, where your rate's going to be higher.
Right.
You're looking at, okay, I've got that payment plus space rent.
Right.
That you got to make. And that's really what I tell people is like you're buying really any manufactured home, when it comes from the manufacturer, is personal property.
Right.
Until it is put on a lot that you will own, it is permanently affixed on a 8-point foundation.
Foundation.
You're right. And then it is why am I blanking on the word? It is converted with manufactured housing division. Right.
And what's that cost?
I honestly don't even know off the top of my head.
Yeah. I do. Because we went over it today with what's his name. So
how much does that cost, Cal?
We got a quote, and it's a pretty broad spectrum, dude.
You got to do engineering.
We got a quote between $2,000 and $4,000 to convert this one that is for sale down in Gardnerville.
Yeah, I said if you do the engineering, it's $800 just for engineering right now. So
because those guys went to school for a long time.
Yeah.
So I
think I got a stamp somewhere.
So you've got, in the manufactured world, you've got real property, personal property.
Yep.
You cannot get a loan or you can't get a mortgage loan.
Exactly.
On a manufactured home that does not have an 8-point foundation.
Exactly.
And converted to real property.
And here's one other thing that comes up is people go and they look and they say, hey, I'm buying the lot that this is on. I'm buying the property and it's on a foundation. They just didn't go through manufactured housing division and jump through the hoops to turn it into real property, which I don't know why any seller wouldn't do that up front, because it increases your marketability so much. But that happens.
And potentially increases the value, right?
Yeah, and it happens from time to time. So what we can do, the process is you go and it's like 3 pages that you fill out with manufactured housing division. You get the engineer out there, they look at it, sign off on it. Then you submit the paperwork and wait 3 months.
Right.
So instead of making the seller do the paperwork and submit and wait 3 months before we can buy the house, what we will do is we go and we do all of the paperwork up front. We complete the sale and put the home into our borrower's name, and then we escrow generally will directly submit to manufactured housing division.
Cool.
So you can buy it while it's still personal property as long as it is going to be converted directly after closing.
Cool.
So, yeah.
And then we've got your average run-of-the-mill site stick-built home.
Yeah.
Your standalone home that is on either a slab or a foundation. And I mean, I don't even know how to
take it from here. This is a boring part of the conversation.
Super boring, dude.
Right. Might have an HOA, may not have an HOA.
Right.
And one of the things that I get a lot, guys, is people come and they say, what should I be looking for? And really, you know, it's like, do I want to find a condo, townhome, stick built? Am I going to hold off? Am I going to wait an extra year so I can buy a single family? Or, you know, and I get that a lot. I'm sure you guys do too. Usually what I tell people is find something that works for you right now and start building equity for yourself.
Right. Yeah.
You know, it might not be your dream home, but it's the first step in a series of steps to get to where you want to be.
Yeah. Don't wait to buy real estate. Buy real estate and wait.
Yeah, baby.
Yeah. Yeah, dude.
I mean, I will say, just from like sitting here and listening, and I mean, you know, obviously I have a background in real estate here, but from a risk tolerance standpoint, right? Like people are out there buying these mortgages. And I would imagine they're buying a lot of the mortgages that are less risky. And so the less risky real estate play is single family, right? Like hands down.
Right.
I think we'd all sit here and agree, right? I agree with what you guys are saying, right? Buy what you can.
Yeah.
I think that, you know, the dream of home ownership is a real thing, and like we get to see it.
Yeah.
But yeah, that's just kind of my, you know, 2 cents and takeaway.
Yeah,
Here's really, if people want to understand it on a broad level, right? And you talk about the risk profile, it's reflected in the interest rate. So when you say they're buying less risky, you know, investments, they're looking for those single families. Yeah, but those carry less return, right? So if you can get a single family at 6.25 and a condo 6.75 or 6.625, the return to that investor that's buying that mortgage, I mean, really at the end of the day, it's that risk is taken care of up front with the interest rate. Yeah. And then everything gets turned into a mortgage-backed security, and that investor is getting a better return overall because it's got X amount of condos that cost that much more up front to get. So
awesome, dude.
Cool.
Yeah.
I think we pretty much nailed that one.
Basically, except for the whole, you know, dog thing. Come on, buddy.
Thanks, guys.
See ya.
See you next time.